Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. We're looking at the donations portfolio. I'm going to give an update on it. Give you an update on where I'm looking in the markets, where I think the best opportunities are for investment. So we'll go into that. This is basically any sector that I deem to be worthy of investing in, which is usually the commodity type sectors. I can tell you and show you what those indexes are doing. We're seeing some incredible moves. It is ridiculous, ridiculously awesome. That is. I'll give an update here. Give you my financial opinion. Please don't use as advice. But this is the way that I would be setting up the portfolio. This is the way that I would be doing it, and position sizing and whatnot. And this is for a commodities type portfolio. So we've got the portfolio behind me. Here it is. We've got, just to kind of go over some of the companies, we've got Aluminum Corp China. And I know there's some people talking about, well, why am I adding China shares? Guys, this is one of the largest areas for aluminum. I don't think you can not, we can't afford to not have it. We can't put sanctions. We can't be doing this stuff. So here's another thing I want to kind of talk about. Everything in this world is limited by physical things. Everything. You can't build cars without aluminum. You can't build planes without aluminum. I mean, aluminum is everywhere. And if we're going to run into what I think is a pretty good shortage in the future, we're talking 2024, it's right in front of us, where we hit deficits that are going to materially impact the world. We're going to hit deficits in roughly the same time frame for copper, nickel. You can just go through all these things. You can't solve this politically. This is like, you need to solve this by somehow extracting more out of the ground. Now, here's my opinion. I don't know if it'll be right. We may be coming up to an area where we won't be able to extract as many minerals as we want to out of the ground. It's a flow rate problem, and I don't care how many reserves are in the ground. If you can't get them out of the ground and processed, they don't exist above ground. I mean, so you could have 50 years worth of petroleum, but if it's the hardest, least energy returning petroleum that we've ever mined, and remember, we're mining some of this stuff. This isn't like we're pumping it out of the ground anymore. We're going into mining operations to get this stuff. It's going to have an impact on flow rates, and it's going to have an impact on how much energy gets put back into society to be used for things like hospitals and artwork and all that other stuff. The minimum energy return is something like 10 to 14 to 1. That means you get 10 barrels or 14 barrels of energy back versus one expended in order for society to operate. We were running off of 100 to 1, 80 to 1 back in the day. Now we've been dropping down further and further, and you can see this by the things that we're going after. You don't even have to understand. It's like, you're going to mine this stuff and get oil out of sand. I mean, that we are going to deeper portions in the ocean to get this stuff. I mean, we're going all over the place. So obviously, to me, it seems obvious that the energy returns are going to decline over time. So this portfolio that I'm setting up, I think that these are the things that are needed, that we have to do it. So I'm putting my money where I think we have large opportunities. One of them is Aluminum Corp of China. That's our first one. First Majestic Silver mining company. Peabody Energy Corporation, BTU. That is the highest performer in the portfolio. It's up 39%. And this is only like a week old. This portfolio is. I think I started it on Tuesday of this past week. Coeur Mining, another silver gold mining company. CDEV down 3.5%. I like CDEV here. I would cost average in more. It's a small position too. It's only 1.82%. Denison Mines. So I added Denison Mines into the portfolio. Why did I start looking at some of these uranium companies? I know there's a large scare last time. This is URNM, North Shore, just to show you. Large scare, but if you notice, if this was a true scare, this would have closed at its bottom. What happened was it opened here. Here, I'll get this out. It opened here, it opened here, right? It opened there, it went down, reversed, and came all the way back up and closed here. The momentum is heading higher. This, I think, was a fake out. So I tried to get some shares. I tried my best to get it wherever there was in here. So I grabbed some DNN, Denison Mines. Denison Mines, it's not an OTC stock, so I'm kind of sticking to the non-OTCs at the moment. DNN is Denison Mines. They've got a really good technical team. Here's DNN. It's got that nice little kind of wick. I do think this will eventually work its way higher, and I would be a buyer in here. We've got, we're kind of coming up to some resistance through here a little bit. That's what we're trying to break. Here, let me draw a line across. We're trying to break basically these resistance areas all through here. Once we break through that, I think we're going to see a nice big run. So, and this is the same across the entire sector. So I picked up Denison Mines there. EXK, that's a silver company. Fortuna Silver Mines, another silver company. Notice I'm loading into silver. Why silver? Silver has more leverage than gold does. If you were to look at the gold to silver ratio, I think we are going to compress lower here. So we broke out. We had a return move upward, basically almost to this support resistance line. And now we're coming back and we're about to break the ratio lower. It looks very good for a break lower. What does that mean? It means that silver is going to outperform gold. If gold is moving up in a breakout, silver is going to move faster. So what am I doing? I'm grabbing the silver companies that are leveraged to that move. Something like, if we move on up, Fortuna Silver Mines looks really good for a move higher. If I can, there it is, FSM. And it hasn't really taken off yet. We've got the falling wedge. It's broken that to the upside, and this is where I like to load in. So yeah, that's where I bought. And EXK is in the similar situation. It's right there. And then AG is also in the similar situation. And AG, I always keep the big picture view in mind. This has a massive pattern it's about to break to the upside. And Newmont is another company, and it's like, why am I looking at all these things? Newmont already broke out of its 30, 40, 50-year pattern. It's ridiculous. So why am I looking at other companies? Why am I doing that? I'm looking at everything in the sector. If gold stocks start taking off, which they have, Karora Resources, Newmont, Anglo Ashanti, all these are starting to break. Silver's going to follow. If that ratio compresses to the downside, silver is going to be an insanely good spot to be in. So I wanted to buy some silver companies. Helix Energy Solutions. And so we're going into the energy solutions company, up 7% already, and I've held it for less than a week. All of the energy service companies look really good. So that's a spot I want to get some exposure to. HLX is one, Intrepid Potash, the second best performer, 22.86. And remember, I've only held this for like 3 days. But IPI, that's right at a really good break. LEU is Centrus Energy Corporation. This one's right at its support line. Looks good. I would actually cost average more money into it if I could. Noble Energy, another energy service company, up 11%. Northern Oil and Gas is right there trying to break its long-term resistance line. It is breaking it right now. Northern Oil and Gas actually looks really good for a big... all these companies, they all look ridiculously good for a big move higher. There's your break right here. There's your double booty bottom. It is slightly turned sideways, dipped lower, and we're breaking to the upside right now for a break higher. Looks really good, and hopefully we can get a nice big run out of this thing. So that's Northern Oil and Gas. OII, another one that's energy service company. Cisco Gold Royalties, up 7%. That's another one that just broke a really long-term pattern. These big long-term patterns mean something when you break them. It means you have got a long way to go on a move higher. So all of these, if you notice, all of these companies, I have a reason they're in the portfolio. Every single one. If you're just buying something you don't know what the reason is, probably shouldn't just be buying it. Pump just broke out of its pattern. That's an energy service company. Looks really good. Rig's another energy service company. That one looks good. I've got SM Energy. That just recently broke. I got to talk about SM. That just broke out of its resistance line. It's just peeking its head out. If oil goes higher, this thing is going to rocket. We're at a big, large resistance line at about 40 bucks, right where it's at. We break through here. It'll be fun. It's going to be fun. We've got Tidewater, another energy service company, up 9%. UROY, I just added UROY. I made it one of my larger positions. Why did I make it a larger position? Because it's a royalty company getting royalties from a whole bunch of other things. It's more of a speculative play because the royalties aren't paying out yet. And it does have physical uranium pounds. So I think it's a pretty good mix between a physical holder of uranium and royalties. Like that's what I like. That's great. And hopefully it turns out great. I made it 9% of the portfolio. I bought it 2 times. And then Wheaton Precious Metals is another one that's breaking to the upside for a precious metals royalty company. And then I've got COPX. That's how I'm kind of playing the copper move. It's up 3.25% from where I bought it. The overall portfolio is up 6.34% in less than a week, and then 3.25% down here. And then I've still got $200 in cash waiting to be deployed. And I will deploy it if we see further weakness in uranium. So where I would be looking, there's a couple of companies that look really good. Energy services look really good. So if you want to go back and look at my oil and natural gas update, it just came out. It comes out every single day. The energy service section is where I would be looking. There are some other areas. I think fertilizer, IPI is a really good spot to be looking at. And then uranium has had this pullback. I think uranium looks really good at the moment. And companies that are kind of off the radar of everyone's, some of these smaller ones, like I know UEXCF, no one's really, given that the love, but from a chart pattern perspective, guys, I mean, this is a booty 1, booty 2, slingshot lower here. It's slung up, and usually what you get is a little congestion area before a move higher. So this exhibits all of the good traits of a move to go higher. So does Mega Uranium. That's another one that's got a booty, kind of double booty bottom with the slingshot. It's consolidating here, and then we're going to see a big move to the upside. So whenever you see these patterns, they're called Wyckoff accumulation patterns. They exhibit everything that you want to see. And I'm seeing this across. I mean, here's ALXEF. This one's got it. It's a small booty. There's a small one and then a big one. And then this thing is still below its resistance line, but it has it. So does Azincourt. Another one, if you kind of look, if you draw the line across this way, they're a little uglier, but they still have it. They still have the big volume. They still have big up days like here, and it's consolidating right to a point. I mean, a lot of these companies have the booty bottom. It came up, consolidates, and then goes. But they all have that type of movement, and they're very low in that movement. They're still got a lot of ways to run. So where I would be looking for the portfolio next before I add is probably uranium still, because I like that we got this pullback. The pullback didn't destroy it, I don't think. I think the momentum's still to the upside. It was news. And this is all structurally driven, guys. If you look at all this stuff, I don't know how they could not use uranium. And I'll do another clip on that based off energy prices and all that stuff. So that's what I've got for today. I would be looking at uranium and energy service companies to add in. That's what I've added into the portfolio here recently. And I think there's a lot of really good upside in both those sectors. Give me a thumb up, guys. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.